Singapore dollar fell today after the central bank lowered its inflation outlook, while most emerging Asian currencies dropped as a result of the overall strength in the US dollar. I'm joined on the line by Koon Goh, Senior FX Analyst at ANZ in Singapore. So do you see the Singapore dollar as Asia's most vulnerable currency due to prospects of higher US interest rates? And in the short term, where do you see it heading?
Sure. In our view, the Singapore dollar has the highest beta against the US dollar amongst regional currencies here in Asia. So from that point of view, the Singapore dollar is certainly going to be more sensitive to any movements in the US dollar. Now, at the moment, the US dollar is driven by what's happening to US interest rates. So yes, from that point of view, the Singapore dollar indirectly will be sensitive to what US interest rates does. In the near term, given that the U.S. economy is yet to show very strong signs of growth. The U.S. Federal Reserve has indicated they're not going to be hiking interest rates for some time. So that's keeping U.S. interest rates low, which is resulting in the U.S. dollar weakening, and hence the Sing dollar has been fairly strong recently. But we expect those factors to unwind, particularly from the middle of this year onwards, as we believe the U.S. economy will start to show signs of improvement, which will then lead to a recovery in the US dollar over the second half of the year.
And staying on the topic of a stronger US economy, now towards the end of the year, you see the US dollar hitting 130 against the Singapore dollar. So can you go into a little bit more detail about this?
Yeah, so our view on the Sing dollar is largely a view around how the US dollar is going to perform. So from the Singapore side, we had the MAS monetary policy statement today, where they have left their policy stance unchanged. So in terms of the influence on the Sing dollar, I believe it will largely be driven by the US dollar. So over the second half of this year, we're expecting the US dollar to start to show signs of strength, as it will become evident by then that the US economic recovery is improving, and that will get the interest rate markets to start contemplating the possibility of rate hikes sometime in the middle of next year. So pretty much in the second half of this year, we will be moving closer towards the reality of interest rate hikes in the US. So that will start to push US interest rates higher, which in turn will see the US dollar strengthen. And as a result of that, we expect the Sing dollar to come under downward pressure against the US dollar. Hence our view that the dollar Sing will start to move higher towards 128 by the middle of this year and 130 by the end of this year.
Thank you very much. As always, it's been a pleasure speaking to you. Well, viewers, do stay tuned as we have plenty more FX and economic updates heading your way. Goodbye for now.